I want to talk about the latest Fannie Mae economic report that came out, because there's some interesting stats in here. And look, I think although these are not earth-shattering numbers, it is a sign that things are moving in the right direction. So what we saw is Fannie Mae's projections for 30-year fixed-rate mortgages, previously anticipated to be 6.5 by the end of 2025, now revised down to 6.4. And by 2026, they were expecting 6.1. Now they're expecting 6.0. So not a big move, but, nonetheless a move from the previous quarter. I'm very hopeful that we see a 5 handle in 2026, right? Something in the high 5s. I think that's really what moves the needle for home buyers and refinance opportunities. And I'm going to talk about refinancing here in a second, just briefly, because some of these stats that I'm going to share with you are going to blow you away. But more on that in a second. A few more things from the Fannie Mae economic report. I just pulled a couple things out. Number of total transactions, mortgage transactions, was previously expected at 1.90 trillion, now expected in 2025 to end the year at 1.92. So from 1.90 to 1.92, and in 2026, it was previously expected 2.28 trillion transactions. Now the projection is 2.34. That includes purchases and refinance transactions. So we see a growing number of transactions year over year from the lows that we saw in 2023. They just continue to get a little bit better. And I believe that, just a little more of a significant dip in rates, and we see those numbers go up drastically, because there is a lot of mortgages now that have been written since interest rates went up, and those people are dying to refinance. Again, more on that in a second. Unemployment projections. This one is super important. And the reason I bring this up over and over again is because Jerome Powell, who, as we've talked about, the dual mandate of the Federal Reserve, one of which is, full employment as much as possible. He had mentioned that the projection was 4.4% unemployment. And if that number gets above that, you're going to see more aggressive action by the Fed. Of course, depending on what's happening on the inflation front, right? But even Fannie Mae is now projecting that unemployment by end of year 2025, so over the next 5-6 months, that unemployment reaches 4.4%, and the projection for at least the first half of 2026 is more like 4.5%. So this has to be on the Fed's radar, and I think reinforces our thought that we're going to continue to see some weakness in the jobs numbers, some weakness in employment overall, which is just half of the Fed's dual mandate. So if inflation stays in check and we get continued slowing in the employment side, we know what the Fed needs to do to help correct both of those things.